Hello, everybody. My name is Dan Pan. I'm founder of Haddee Education. Today, we have invited Mandy for this special sharing text and FAFSA. Go ahead, Mandy.
Hi, everyone. I'm Mandy Prince. All right, so a little introduction for myself. I'm a CPA since 2019. I'm licensed in the state of California, and I live in San Diego right now. So I've been working in tax field for over 7 years now, and I can speak fluent Cantonese and Mandarin. I was born and raised in Hong Kong, so I came to the United States when I was 16. So I've been in the state for about 17 years now. And I'm an expert of complex tax regulation. I deal with from startups, S Corp, C Corp, partnership, in variety of industry, real estate, moms and pop shops, all the way to publicly traded company. I have experience to doing tax returns, audit financials, and all of that for them. So yep, and that's pretty much just it about myself, a little introduction. So let's go over to the agenda. We have 3 topics. We're going to go over some basic tax deduction and credit, some last minute things that you can do for tax saving for a personal return. And if you're a business owner, there is a little bit of last minute tax deduction that you should be aware of, is something that you can do because we have like 4 more days before this year's is over. And then we're going to move on to our big topics, the FSA, the financial aid application, and some updates because the application just launched it this month. And so there's quite a bit of like updates that I wanted to mention in this presentation. All right. All right. So let's start with
so I will share for this, Mandy. I'll just have for 2 minutes. Oh, maybe 1 minute. Can you see me?
Mm-hmm.
Yeah. Okay, so yeah, I just want to introduce our organization a little bit. I think most audience very familiar with. So I'm the founder for Haddee Education. It's a San Diego company, but we actually do everything pretty much remotely. Right now, I live at near UC Berkeley in Berkeley, California. And so this is our mobile website. You can see we provide a lot of courses. Our main service actually is college counseling. To help students get into a school that fit their needs, mainly colleges, graduate schools, and private high schools. And we also provide a variety of projects or activities and Zoom session, free Zoom events is one of the activities, and also different courses like SAT, group classes, one-on-one, and also jumping around. We also help students with internship. And most of students that do internship are our counseling students, and it's one of their extracurricular activities. So anyway, I would not, I think most of you are familiar with our company. So I'll give the microphone back to Mandy, and I'll stop sharing. Go ahead, Mandy.
Let's see. Do I need to share again? Are you guys?
Yes, sorry.
Okay. Can you guys still see it or?
Not yet.
Mm-hmm. Okay. There we go. Okay. All right. Perfect. Okay. All right. So let's jump into the basic tax deduction and credits for your personal return. Oops. Yep. There we go. Okay. So personal tax deduction for our retirement account for 401k. If you have a W-2 job and you haven't maxed out your 401k, the maximum for this year it's 22,500. And if you're 50 or older, you have a catch up for 75,000. For IRA or any backdoor Roth that you want to do, the maximum this year is 6,500. And if you're 50 or older, you get extra catch up for $1,000. For HSA, those are deferred tax medical expense account. If you have a high deductible plan through your work, you get to have a HSA account. The maximum for the family it's $7,750, and you can, even though you don't have enough medical expense for the year, but those funds are available to roll over to the next year. So if you want to save taxes, this is one of the benefits that you can do. For a family, it's $7,750. If you're single, it's $3,850 for the year. Okay. Children tax credit and dependent care. If you are if you have a kid that it's 17 years old or younger, you automatically get a tax credit for $2,000. And if they are older, 18 or older, then and if they're students and under 24, or any dependent or qualified dependents, including your parents, your aunts, or anybody that lives in your household, you get an extra $500. Solar credit, it's coming back if you install solar for your home. This year, it's back up to 30% eligible cost, meaning any money that you put into the solar panels or installation. Let's say you put in 20,000, you get a 30% tax credit out of the 20,000 that you spent, which is about 6,000. So that's a big credit that it's come back. It was supposed to fade out next year, but they come back for the next 10 year. Same thing with the clean vehicle credit. I like to call it the Tesla credit because a lot of clients like to buy Tesla and ask me. Tesla was completely phased out in 2022, but the full credit is coming back. There's no more manufacturer phase out for the year of 2023. So if you bought a clean vehicle, or you are going to buy one this year or in 2024, you are likely to go and to get your 7,500 tax credit. All right. So for business owner, if you have a Schedule C or S corp, your IRS limit for your 401k, any retirement plan, maximum for all sources is 66,000 that you can write off. And if you're 50 or older, your maximum is 73,500. If you have a defined benefit plan, the maximum for the year is 265,000. All right. So business credit, same thing for the solar credit. It's come back. A lot of people ask, they think that the solar credit is only eligible for your primary home, but it's not. There's also a business credit. If you install solar on your rental property, you also get the same 30% eligible cost tax credit for your rental property. PTE credit, if you live in the state listed here, 1, 2, 3, 4, 5, 6, 7, 8, 9, that's these 9 states, you are eligible for a PTE credit. What it means is if you own a pass-through entity, an S corp or a partnership, you get to prepay some of your state tax and deduct it out of your business. Because of the Schedule A limitation of the 10,000 property tax and state tax limitation in your Schedule A, a lot of people lose out of the state tax deduction on your federal return. So these states offer a PTE credit. If you own an S corp or partnership, you get to pay your state estimated tax with your company, and you get to deduct it as a federal deduction. And the calculation, very basic. It's basically 9% of your net income in the state of California. So, for example, if you make 10,000 in your S corp net income, you get to write off $900 as the federal deduction. All right. Okay. And then for S corp people, if you pay your health insurance out of your S corp, that expense needs to be reported on the W-2 in order to count as a business deduction. So don't forget to do that, or you will lose out as a deduction. 1099s, there's recently changed. So if you pay any vendors for over $600, you need to pay them you need to issue them a 1099 NEC at the end of the year. It's any contractors or consultant that you pay over $600 throughout the year, and any lawyers or attorney or any partnership, but you don't have to issue a 1099 if they're S corporation or you're purchasing merchants or you're reselling goods from them. But any services that you've received from the vendor, you need to issue a 1099 NEC. Now, I've heard that the IRS, it's been more strict on disallowing the expenses if the business hasn't issued a correct 1099 to those vendors. And if you pay rent, for your business, you need to issue a 1099 miscellaneous to your landlord. All right. So these are some highlights for the taxes, and now we're gonna jump into the financial aid updates for the 2024 and 2025. So a little bit of a background. What are these changes driven by? It's two major acts that the Financial Aid Department have announced this year. There's one is the Future Act, and one it's the Simplification Act. What is the Future Act? It expands the access to federal student aid to exchange the FAFSA experience by allowing the U.S. Department of Education to automatically obtain federal tax information from the IRS for students, parents, and other contributor. Could be your step parents or spouses, whoever consents. What I mean is the U.S. Department of Education now have the ability, with your consents, to get basically a text transcript from the IRS. This is something that you have to do. It's not an option anymore. If you don't do it, it automatically disqualify the student application. And then the Simplification Act, it introduces significant changes to the FAFSA application process, including changes to the forms, how students and family will complete it at application, and eligibility calculation. So we'll go deeply into the major changes for the application. All right. So for the year 2024, the academic year 2024 to 25, the application launches this month. And for the federal deadline is June 30th, 2025. State deadlines vary, so you can go online and look it up. But for California, in our home state, the application deadline, it's April 2nd, 2024 this year. Normally, it's due on March 2nd, but this year it's April 2nd because of the launch date, the delay of the launch date. All right, so key changes. This year they used the word contributor instead of I think it was the eligible, it was parent before, but this year they completely changed the definition of a contributor. Who is the contributor in the application? It's anyone is required to provide information on the student FAFSA form, including the student's spouse, the biological or adopted parent, or the parent's spouse, meaning their step parents. A contributor, it's not your grandparents, not your foster parents, legal guardians, siblings, aunts and uncles, direct family members, or indirect family members, even though they might help paying to support and raise the student. So here are some key highlights that what you need to know. When a student fill out the form, they need to determine who it's going to be their contributor, and they will require to provide their information, including their name, their birthday, their social security number, and their email. And then the contributor will receive an invitation to register an account and then fill out the form, fill out their part on their form in order to complete the whole application. All right, now here is a little scenario, an example. Here's George. George is a senior in high school. He's planning to go to college in fall 2024. George's parents are divorced. George's mother lives in a different state and does not provide financial support. George's dad, stepmom, grandmother, and his uncle all lives in the same house. George's grandma and uncle helps with the household expense. Now here's the questions. Who will be a contributor on George FAFSA form? The biological mother or father, George father and their stepmother. C, George father or all the family members in George household. I will give maybe a minute. B. All right.
I didn't read carefully the contributor.
You're right. You're right. So yes, the answer is B. Even though so because of their parents' divorce, so the contributor is George's father and the stepmother, not their biological father, father and mother, because the mother does not provide any support to George, not their grandparents and not the uncles, even though they help support the household, but they are not the contributor to George. Now that creates an interesting point. It's in your application, if you have grandparents that provide to their like they gift money for your kids, your grandkids to go to school, that doesn't count as an assets in your financial aid application. All right. FSA ID requirements. So all the students and contributor must create an account in studentaid.gov and complete the form online. You have to have an ID. They do not accept paper form anymore. You have to go online and do it. And only student that it's a U.S. citizen or eligible non-citizen, it's eligible for their financial aid. If you are not eligible non-citizen or if you're not a citizen, you're not eligible to apply for the financial aid, right? And sometimes I've come across that some of their parents or their contributors, student contributor, they might not have a social security number for whatever reason for their situation. You can still obtain an FSA ID to fill out the form. You don't have to have a social security number. All right. Financial aid direct data exchange. So this is something new this year. It's all student and contributors must provide a consent form. And if you don't provide a consent form, their application will automatically get rejected, meaning that you will have to consent the federal tax information to transfer directly to FAFSA via direct data exchange with the IRS. You can, even though you submit a paper, a copy of your tax return, a copy of your 1040, that it's no longer good enough a support for the Department of Education. You must consent and transfer the form from the IRS directly. And they will use the federal tax information to determine the student eligibility for their federal student aid and allow the U.S. Department of Education to share their federal tax information with post-secondary institution and state higher education agency for use in awarding and administrating financial aid. So even though, and here's another point, it's even though you the contributor or student doesn't have a social security number, or they don't never file taxes in the US, or they file taxes outside of the US, they still need to provide a consent form. So that's very important. All right, now meet George. Sorry, let me see. I think this is a duplicate. Now meet Owen's family. Owen's parents live with their child Owen, who will become a sophomore in college in fall 2024. When Owen fills out their 24 to 25 FAFSA form, his parents are identified as a contributor. However, Owen's dad filed a they have a divorce in 2022, and Owen's dad filed a federal tax return as a married filing separate. However, Owen's mom didn't file a tax return due to low income. Now, if this statement is true, because Owen's mom didn't file taxes, only Owen's dad will need to provide consents to transfer federal tax information into Owen's FAFSA form. Is that correct? I see.
Yeah.
Dana knocking. All right.
There's no text to show, maybe. Yeah.
No, it's not right. That's not right. So, as a legal parent, for Owen, they both have to consent, even though Owen's mom don't file taxes. They both have to consent. All right. All right. Another key change is student A index. So the way they calculate the eligibility has changed this year. This year, they're going to use an index called the SAI. Short for SAI, it's a number that we'll use to determine the eligibility for need-based aid. It is calculated using the information that the student and contributor, if provided,
结束了啊？啊，
oh, all right, I'm gonna go ahead. Provided on the FAFSA form. So the SAI will replace the expected family contribution, what it was before, starting in this year. So it goes into very details on how to determine the points in the index. So I'm not going to go over it because it will be very lengthy if I like walk you guys through it from start to bottom. But the highlight that you can get, it's the need equals to the cost of attendance minus the student A index, the points that you're going to get, and minus any other financial assistance. It could be other financial assistance could be like a scholarship that you get or sponsorship that you get from a private institution, anything that the student get to help support the tuition, not the loan, but like if you get any scholarship from the school or anything that will count. And here's some highlights that you will need to know from the SAI index. This year, if you receive child support will now also count as an asset, which it doesn't count before, but right now it will count. And if you own the family farms or a small business, this year it will also count as an assets for the parents. And before, if you have let's say you have two students go to college at the same time, they have siblings that go to college at the same time, usually that will help, but this year it no longer consider in a need analysis formula. So meaning that if you have two kids going to school at the same time, it will not benefit you, but they will still ask the question, but it will no longer benefit you. So here's a link that explains like how the index is calculated. So I'll send out the PowerPoint and then you guys can click through it and look at the details on how they calculate it. But these are the highlight major changes this year. All right. Another key changes is the unusual and special circumstances. Unusual circumstances are when a student is unable to contact their parents or where contact with the parents pose at risk to the student. Starting in the year of 2024-25 award year, applicants who indicate on their FSA form that they have unusual circumstances will be granted provisional independent status, meaning that and unusual circumstances include human trafficking, legally granted refugee, parental abandon, or student or parent incarnation. So it will have to be any major things that happen to you, then you do not need a contributor. What it means, the student will become in an independent status and the student can apply financial aid alone. So this list of the situation, it's when a student can be considered as an independent student. In year 24 and 25 award year, an independent student could be any one of these, then you will qualify as a dependent. If the student is married or graduated or professional student, if it's a veteran, if it's a member of Army Force, if the student is an orphan, a ward of a court, someone with legal dependents other than a spouse, and pick minor, someone who is unaccommodated and homeless or self-supported and at risk of being homeless, then you can apply as an independent student and you do not need a contributor if you fall into these categories. All right. And now we just go over what is the unusual circumstances, and now what is the special circumstances. Special circumstances will also qualify a student as an independent, or you might have you can't be a your application can be adjusted or changes if any of these things happens to you. For example, you've lost an employment or financial assets, um, reduction of income, your tuition expense at an elementary or secondary school. There is multiple tuition expense more than your college tuition, or unusual medicals or dental expenses that is not covered by the insurance. So here is a little example. Here's Emily. Emily is a senior in college and an independent student. Emily was recently laid off from an off campus part time job. Since Emily already submitted the 24 and 25 FAFSA form and did not receive enough aid to cover food and housing without a supplemental income, Emily is thinking about putting their school on pause. Now, is that statement true or false? Because Emily earned income in 2022, the school aid offer can't be adjusted. Emily should focus on finding a new job and saving up money to graduate in the future year.
False.
That's right. Even though Emily income was a factor in the student aid index and a offer, the school may be able to take Emily loss of income into account and adjust the aid eligibility. Emily should contact the school financial aid office to get additional information and be advised on what documentation to be submitted. So if family circumstances changes, it's not the end of the world. If you feel like your student might you have a loss of income that might put them into a better financial aid situation, always talk to your school financial aid office and they might offer different alternatives or solution for you and your student. All right, here's the last example. Madeline. Madeline is a sophomore in college who shares an apartment with two roommates. Madeline was born in 2024, so she's 19 years old, doesn't have a spouse or any dependents, and she's not in the military. So she doesn't qualify as an independent student. Madeline parents don't contribute to tuition or school expense, and they have told Madeline that they don't want to provide their information on their 24 and 25 FAFSA form. What will happen if Madeline parents refuse to contribute on their FAFSA form? Madeline will receive a temporary independent student status. Madeline will be eligible for subsidized loans only. Madeline may become ineligible for federal student aid. Madeline can ask other relatives to be a contributor instead. This is very tricky.
B.
No. No. All right. The answer is C. So, like I said before, the consent is very important. Even though you do not want to provide your student college, you must consent. Otherwise, the application will just become ineligible. All right. Let's see. And I think that's it. That's all I have. No, I ended a little early. Probably I talked so fast. So if you guys have any questions? Or then if you have anything to add on besides my content.
Yeah, that's fine. I will get you a PDF. We'll post it. Yeah, that's not an
Okay.
issue. So, I had quite a few questions. So you're saying that uh for multiple kids that the tuition won't be, the aid will not, like, we won't get like a discount on the tuition if we have
Correct.
multiple kids.
Correct.
Mhm,
Because
right.
because of the calculation before, what is it called? The EFM. I forgot I forgot what it stands for. But the person, the student, how many students you have in college or how many kids you have in college actually will give you a better index, meaning that you have a higher chance to become eligible. But this year, it's no longer um, a benefit to the student anymore.
Okay, I see.
Yeah.
Yeah, more questions are coming up. Yeah.
Okay.
So yeah, you can see, right? There are question coming. Yeah, so we'll probably start with the order. So
Let me see.
mhm,
Okay.
from
Uh,
Sharon, yeah. Mhm,
chat from the chat, right? Yep.
mhm.
Okay. Let me see. Okay. No, do
You
not.
can stop sharing, yeah, so we can see the chat. Yeah.
Oh, okay.
Mhm. Okay, good. Mm.
Okay. Okay. Let's see. Share, I'm not sure we can see.
If if
All
we
right,
don't,
so
yeah.
Sharon. All
Mm.
right, start with Sharon. If we do not want to apply for uh, need-based financial aid, am I required to fill out a FAFSA form?
Mhm.
Uh, I think the need base, it's how they calculate it. But I think you still need to fill out. I'm not so sure on that question.
Yeah,
I'm not sure.
that's not a CPA question.
Yeah,
That's a
I'm
college
sorry, I'm not sure
counseling
if I
question.
understand it, but if from what I
So I
understand, the need base, it's like how they calculate it. So I think you still have to fill out the form if you want to consider financial aid, right? Is that correct?
Yeah, if you want to be considered for financial aid, you must fill out the FAFSA. So the question is, some schools offer merit-based scholarships, and those merit-based scholarships require you to fill out FAFSA. So even though it's still merit-based scholarships, but they still want you to fill out FAFSA. So hopefully we answer that question.
Mhm.
I did not fill out FAFSA for both of my kids. And neither of my kids got merit-based scholarships,
Yeah.
even they applied. Yeah.
Yeah.
Mhm.
Yeah, there's so much to learn here. I mean, I still have ways to go before my kids needs
Yeah,
to
that's
go,
for
but
college counseling. So
yeah,
yeah. Mhm,
yeah.
yeah.
All right. Any advantage if applying FAFSA early? Any disadvantage if applying late? Um, personal, I don't see any advantages or disadvantages of applying late or early, but you're running into a risk if you don't have anything completed by the deadline, then you might get rejected, meaning all your consent form, everything that needs to be corrected, every information needs to be corrected because I think if there's some information that is not correct, they give you a chance to correct it. But if you submit it late, you might not have a chance to even correct any misinformation on their application.
Mhm. Okay.
All right.
So yeah. So we see Yuka. Yuka, you raised the hand, right? Maybe you give a chance to Yuka.
Oh yeah.
Yeah, go ahead. Mhm. Are you there, Yuka?
Yes, I have a
Go ahead.
question. I have social security number, but my child who is not born American, she does not have a social security number. Can I create an account for my child and fill out all the information?
Yes, you can. Even though the student doesn't have a social security number, you can still apply for a FSA ID.
Okay, thank you.
Then any advantage if applying FAFSA, or we answer how many years tax returns would they require with FAFSA, Mandy?
Um, from what I see, it's only 1 year that they wanted to see, but then right now they have you have to consent to exchange information. And I believe that in the consent form, they will list it how many year that your consent to share to. So there's another thing. You don't I don't think you're required to like once you consent and they open up like 10 years of your tax return. I don't think that's how it works. They're going to exchange everything. It's usually the recent year and maybe the recent most 3 years most.
So the question is for students for 2024, and most tax returns won't be done for 23, right? So usually it's 2022, right?
Right. You don't have to you can have your prior year tax return, and you don't have to have your tax return filed by the time you fill the application. But the key is you have to consent to them. So when you do file your 2023 tax return later, they will have the ability to share the information between the IRS and the Department of Education.
Okay,
Yeah.
I see. Oh, one more question. Do we have to apply for FAFSA each year? I shared this event with a few college groups, right? So
Mhm.
do we have to do it every single year?
That I'm not 100% sure. I don't think so. I think once you're in it, but I have to double check on this one.
Okay. I know if you switch schools, we have students.
If you switch school, but if you stay in the same school, I don't think that's the case.
Okay, can you please double check later?
Yeah,
Let
I'll
us know.
double check.
Okay.
Yeah.
That's good. Okay. Yeah. So, okay, that's is FAFSA form required for merit? Yeah, we answered that question. Yeah. Some colleges require you fill out FAFSA to apply for merit-based scholarships, but it's really school by school. Okay.
Mhm.
Must student be dependent to be eligible for FAFSA aid? Yeah.
No, the student do not have to be dependent to eligible for FAFSA aid. If the student there, let me go back to that slide. Oops. If they are if there are unusual circumstances, for example, their parents is missing, they are a refugee, or they're married, or there's a few unusual or independent students that let me share my screen again, because these will be the reason that your kid could be an independent student and they do not need a sponsor.
Okay.
So if they're married, if they're in the Army Force or military, if they're orphan, or
Okay.
yep. And what is the unusual?
So Mandy, can you pause here? Because that's very important. So one of my kids is thinking of going to graduate school. Does that, he's already filing tax. He has some internships. He's already filing tax on his own. So when he enters graduate school, does that mean he can apply for aid independently?
Yep. Yes, he can.
Okay, for graduate school, it's fine.
For graduate school, yep, or a professional student, you can. Yep.
Okay, that's great. Okay.
Yep, as an independent, so you don't have to list any contributor or your parents.
Yeah,
He can do it. Yep.
I see. Yeah.
Yep.
So if he's in college and he's already working, he has an internship job or something, can he apply for FAFSA? No, I'm just hypothetical.
He can still apply. It might just not qualify depending their income, depending his income level. But yes, he can still apply for it.
Okay, so the question is that, so the kid is just in a kind of like a regular situation. Parents are working, married, but the kid has his own job for a year or two.
Right.
So can he apply independently?
Yeah, he can apply independently. So you don't have to you do not need a contributor. When you're an independent student, meaning if you're going to, let's say you're going to grad school or PhD, you do not need to list your parents as a contributor. So your parents' income, it's no longer a factor in your financial aid. It will be the student, because the student most of the time will have a job at that point, right? Because they probably graduate from undergrad and they have a job with W-2 or something. Their income will be taken into a consideration, but not their parents and not their parents' assets.
Okay, but that won't qualify for FAFSA for undergraduate studies, right? So I have a junior right now. Yeah. So can the junior apply for FAFSA, not since he's independent? doesn't apply for undergraduate, because a lot of kids here have jobs when they're in college.
In college, yeah. So, but if you're in college, if you're in undergrad in college and you work a part-time job, then you still can apply for FAFSA, but you need a contributor. You're not an
Got it.
independent student anymore.
Okay, I got it. Okay,
Yep.
got it. Okay.
Yep.
So then independent. Oh, how rental property, how they determine the rental property value?
That will in the application. So either the contributor or if the student even own a property, you will have to list it as an assets.
How to decide the value of the asset? Zillow, Redfin?
You will have to use the fair market value, but I would say, I mean, sometimes it's hard to determine, and like I would say if you go on Redfin, like between 10 to 20% up and down, that's normal, because some houses maybe they're in worse condition than what is on the market. The Redfin is only good for for estimate. But I think it's a judgment. It's definitely like a professional judgment that you have to estimate for the application.
Okay, yeah.
Yep.
So one of the parents just say, yeah, we do have to file FAFSA every year.
Oh, okay. All
Mhm.
right.
Okay.
Okay. So thank you for answering that. I did not even know. Yeah.
Yeah.
Okay.
Rental properties rental property can consider assets, Mandy?
Yes. Rental property will consider assets. Yes.
Okay, yeah.
But not your primary home, but rental property.
Okay.
It's considered assets. And also, if you have a business, your business too. And this is something new.
Yeah.
Yep.
Okay. So if the students have other siblings who are in middle school or elementary school, they're and they're paying tuition, maybe private schools, would that help the students to get the FAFSA?
No, that will not. The siblings doesn't help anymore.
Okay.
Yep.
Okay, I see.
Yep. And then
Based on your answers, does it mean FAFSA or each college should decide how many years they want to see? I'll go back to the how many years of returns they want to see.
1, 2, 3. 1, 2, 3 years.
Oh, 1 to 3 years. Okay, I see. Scholarships count as a taxable income?
Scholarship, it's not a taxable income. However, when you file the tax return and you apply for American Opportunity Credit, that will deduct from your qualified tuition expense, but it's not taxable. However, if you receive scholarship more to cover that your tuition and your boarding and any school supply, I mean, it's very rare, but some people have scholarship more than their school expense, then that it's a taxable income.
Okay, so you're saying, for example, hypothetically, total cost is 50K. The 30K going to pay this tuition, that's really not taxable. But the
Right.
other 20K, that could be taxable.
Only if you are not using it to pay room and board. Room and board counts. It's a
Okay.
qualified expense. So anything above and beyond room and board, school supply, anything, if you still have surplus of scholarship, then that will be taxable. Very, very rare. I've never really seen it in my career, but in theory, in with the IRS law, that's what it said.
Okay.
Yep.
Then the gift money from, say, foreign countries.
If a parent receive cash 50K from foreign country, does the cash? No, it does not. Gift that you receive from anyone does not count as income. Now, different country have different gift tax requirement, but in the US, for husband and wife, let's say if I today wanted to give Dan $50,000. My exemption is 16,000, and I have a husband, so his exemption is also 16. So every year between the two of us, we can give anyone 32,000 without filing taxes. So, but I give then 50. So there's an extra of 50 minus 32, 18, right? No, $8,000. That will have to pay gift tax return. That will have to pay gift tax. Gift tax is 40%. So 40% of that needs to pay tax. However, everybody has a lifetime exemption. Right now, we are in their record high exemption. I think it's like 12 million. So as long as in your lifetime you don't give more than 12 millions, then you don't have to worry about paying gift tax. However, you do have to file a gift tax return though.
Okay, so now I'm just gonna get into this a little bit in depth. Newly immigrants coming to this country, W-2 is limited and probably hasn't bought a rental property yet, maybe still renting. So, but even though they are receiving gifts, say from foreign countries, say grandparents, and on an annual basis, those families can qualify for financial aid, right? If the parents are not making huge W-2, right?
Correct. Yep.
Okay.
They only solely look at income from their parents, the contributor.
Okay.
Not looking for people, the grandparents or relatives. Those income doesn't count.
Okay. Okay. Sounds like we need the rich grandparents.
Yeah.
Where are my grandparents? Just joking. I see. Great. Okay.
Right.
So now there's a private email. Someone told me if your rental property is in LLC, you don't need to report it. That's true?
It used to be true, but right now, if you own a company, it still also counts as an asset. So you will need to list your company and the assets in the company, meaning that there's not another way to go around it.
Yeah. So pretty much if you have a restaurant, private business, rental property, they all consider assets.
Correct.
Okay.
Correct.
Okay. And okay, so they're always private message. Okay. Going back to the previous question about when will a student qualify for filing FAFSA independently, what is the exact criteria? Age, undergraduate, graduate, having a job, or what else? I think you answer, right?
Yeah.
So
it's not an age. It's if you're going for graduate or a PhD. Sorry, my son. It's
So, I know. So yeah, no problem. I think I can repeat the answers. Yeah. It is really going for, if your student is going for graduate school, you can apply. So even we talk about it, like my son has a job or had a job, undergraduate, we're still the contributor. So I don't think he can qualify for FAFSA and based on, the parents' income. So considering like if you have kids in undergraduate, most of time that you will have contributor. If your kid is going to graduate school, sounds like the student can apply independently as FAFSA, right? Financial aid.
Correct.
Is that correct? Okay.
Correct.
So we should encourage our students to go to graduate school and apply for FAFSA, right? Okay. Sometimes graduate school is very expensive.
Yeah, they are.
Yeah,
they
very
are very expensive.
Especially for MBA, very expensive. Yeah. Okay. Yeah. So scholarship for room and board is not taxable, but the surplus would be, and Mandy?
Sorry. So scholarship for room is not taxable. Correct. That's correct. Only the surplus.
Okay. The surplus. Okay. UGMA, what is that? Do you know? Stock account. You mean 529?
You stock account. Is it 529?
Yeah, I don't know. Maybe Shirley.
If it's 529, yes, it counts as an assets.
Okay, 529 is an account. Do you roughly know, like when they look at the FAFSA, the aid, they like which one is more like more key factor? Because I went to oh, it sounds like you might be switched to different language. Are you there? Can we talk? Here, English. I don't understand it. Okay, save English. Okay, that's good. So I was at Princeton a couple years ago, before COVID, actually, now. And they're saying Princeton giving out financial aid, even your parents making 200K or 250K. It sounds a lot of money, but in California, especially in tech industry, Bay Area, and it's 200, 250, it's not really that much because of the housing cost. So like for FAFSA, which one's the key? Is it income or asset or both? Like which one, do you know the percentage?
I don't. Okay, so right now, from what I understand, it's really going off of their index point. It's like points that they're gonna calculate.
I see.
Yeah, so it's income. I know income, it's a big one, but assets seems like they like the points that they're giving. It's also a lot too. So if you go to the link, let me share this again.
Okay.
So it's kind of they'll kind of like tell you it is complicated, and you have to like really I can study it and go through we can go through sections on how they really calculated, but it basically you will have like a maximum a student and then see if you qualify. If you don't, and then you go to the student aid index, which look at your income, your assets, and then they calculate points. However points do you get from 0 to negative was it 15,000 to negative 15. It can go to negative, and then it can go up above, and then from there, and then you also minus your need, like your your other scholarship or any eligible income that you get, and then that's how they determine um, for you. So it's hard to tell for me. It's hard for me to like pinpoint and say, oh, income is most important, so don't have a lot of income, or assets, sell all your assets, or I wouldn't recommend that, because it's not really clear from how did they calculate
Okay.
it. Yeah.
There's a secret recipe, basically. There's a,
Yeah,
it's
yeah,
a
they don't
mathematician.
tell you, right?
They will calculate. I see. Good.
Yeah.
Okay. So then, yeah. So Shirley explained it's a UGMA. Basically, it's a Uniform Gifts to Minor Act. It's a gift account. So
Oh, so is it like in a trust, like a gift? Sorry, uniform. If it's a uniform gift to minor act, allows money and financial security transfer to minor through status to be gifted without establishing a formal trust. If it's not a trust, it's a uniform gift to minor act. Huh. I will have to look into this.
okay.
Just if from what it's telling me, it's if it's a gift not from the parents, then it would probably it's not going to count as an asset. But if it's from a grandparent, if it's from a parent, it will count. From if it's from a grandparent or any relatives, uncle, then it will not count.
Yeah.
Yeah.
Sounds like most time, I'm just guessing for UGMAs, like grandparents giving the gifts.
Yeah.
Yeah,
So
a lot of the
maybe
grandparents, especially in US, giving the gifts for the grandkids as tuition. Okay. So hopefully we answer Shirley, but Mandy can take a look at it afterwards, okay? Yeah, so that's, and then what else? More, okay, more. Okay, age, we talk about it. Scholarship, we talk about it. Oh, yeah, okay.
Okay, so
we talk about the rental property as well. Yeah, so Jenny, we also talk about rental property. Yeah, equity. Yeah, it counts, right?
yes, rental property counts. Yep.
Yeah. So basically, it's a fair market value. Usually, like if you have a rental property, fair market value in California is 1 million. It's pretty, pretty normal. And then if you have a loan, say 300K, so they take the 700, right? But if you have 900K loan, there's not much, right? 100K, right?
Mm-hmm. Yep.
Yeah,
That's right.
So Jenny, it is the equity, yeah.
Yep, it's the equity.
Okay.
Sherry, C Corp. The company has
Okay, so there's a private message coming to me. If the family income is above certain number, there's no point applying for FAFSA. Do you know what that number is?
I don't know what that number is, but I can tell you that family circumstances change. And if you don't apply right at the beginning, it might get harder like in the future for you to qualify for it. So I think it's a judgment call. I can try to like look it up and tell what it's recommended by other people or other parents based on their experience. But you should still try to apply for it. That's my
Yeah. So this is from college counseling, our observation. Okay, we need to go through the data, but usually private school gives pretty large sum of aid. So we have students literally transferred from public school to private school and getting a large amount of aid in private school.
right.
So our observation is that unless you make tons of money, we always encourage students to apply for FAFSA.
Right.
And
my
even
father-in-law is a college counsel himself too. So my father-in-law, he's been a college counsel for 40 years his entire career. So I can ask him too. It's firsthand experience.
Yeah, that's our and especially for merit-based scholarship, some schools treat it as a prerequisite. Yeah.
Right.
Okay. Then how much percent? Yeah, I don't think we can answer that question because that's secret SIA index. A complicated SIA index. Yeah. So we talk about.
And I think they complicate it just so people can't figure it out.
Yeah. And then a Roth IRA, students Roth IRA.
If a student has a Roth IRA or a 401k account, they don't count.
Okay. So all retirement account does not count.
Yeah, I don't think it counts. It doesn't look like it will give any points, but I think they might still ask you. You might have to list it, but it doesn't look like there's points.
Okay. Yeah, I see. Cash gifts is not regarded as income, but is regarded as non-taxable income.
No, you do not have to list gift. I don't think so.
Okay.
It's non-taxable, yeah.
Yeah.
And it's non-taxable, yeah.
It's non-taxable. Okay. Any other questions?
And then I see Sherry has a question. C Corp company, if it has cash of 10,000, 100,000, but also has a loan of 100, also have a loan company 10,000 if the cash counts as the equity. So equity, it's how much the company worth. The quickest way to do it is look at your assets, the company assets minus all your liability, and that will be your company equity. And now it could be if the company owe more money, then it could be a negative equity situation. Then there's nothing, you can still report it, but the company basically doesn't worth anything. Another way that some other people do it is they actually hire a third party to evaluate the company and give a company price. But I don't think you don't have to do that for the application. You can simply look at how much, what it's the company assets. Now that including if the company it's own real estate count as an asset, or if the company owns a car or even furniture. If you look at your tax return, look at your assets list. That's a good way to start. That's a company assets, and then plus your cash, and then minus any liability from the company. Yeah. That will be the worth of the company. Yeah.
Okay. Yeah, one thing I think people did not ask, if you have a life insurance, IUIL, whatever, the cash value life insurance, that does not count as well, right?
That doesn't count. Yeah.
Okay, that's good. Okay, so is parents taxable? The RSUs taxable stocks counted? RSU definitely count, right?
Yes, it does. Yep.
Yeah. I would be very surprised if you don't.
If your Fidelity account, your stock account, those counts as an asset. Yep.
Okay.
Or any Bitcoin.
Yeah, there's a private question. Go ahead.
Yep. Sorry, go ahead. If you own any Bitcoin or virtual currency, those are also considered assets. And yep, and then if it's not, it's very hard for the IRS to track right now, but the IRS has become very motivated to track people who's trading bitcoins or virtual currency. Sometimes they give out dividends like extra bitcoin. I know it's not in the form of cash that you're receiving, but you are responsible to pay tax for those free dividends that you receive from Bitcoin also, and you're supposed to report it. And right now they don't have a good way, like Coinbase or Bitcoin. They don't spill out a 1099 like your normal Fidelity or Schwab's or any Robinhood those account, but you still are responsible to keep track of your basis and any capital gain and dividends that you get, and you're supposed to pay tax for those.
Yeah. So
All right.
okay. So the private question is FAFSA the only form to fill out for financial aid, or need to apply for school direct? I think there's FAFSA and there's CCS. There's another form as well. Mandy?
I am not sure. Let me see. CCS. I think you're right. I've heard of the CCS form as well. Yeah.
So yeah, we have some experts that can help you fill out FAFSA and CCS. I'm not sure whether they're online today. And we charge some fee, like a few $100s. So we have helping students to do that form if you wanted to, but most parents fill out themselves, and some parents, they just outsource to us. Roth IRA, all retirement account does not count.
Does not
So
count.
if you have 401k, no, IRA, Roth, no, they don't count as an asset. Yeah. Right, Mandy?
No, that's correct. Mhm.
Yeah. Okay. Any other questions? Okay.
All right.
So, okay, sounds good. Oh, one more.
Oh, okay.
Oh, 100K or 1,000K? That's 1 million.
Yeah, that's 1 million.
1 million. Yeah.
Home loan on it. 1 million. How to report this? So it will be your net. Your net will be your equity, and I don't think they ask you the loan part. So your net value for the property will be the difference will be 400K in this case. Yep.
Yeah.
Yeah.
So the value will be 400K. Yeah.
Right.
But it's a rental property or home?
Yeah,
like-
but if it's a primary home, it doesn't count. You don't have to list it at all. Yeah.
Okay.
Yeah.
So if we live in pretty decent private, because a lot of homes in California are very expensive,
Right.
that's okay, right?
Yes.
Okay.
As far as for this year, it's okay. Yep.
Okay. I see. They don't look at it with the, okay. Yeah. CSS. I'm sorry. CSS. I don't talk about CSS. What's the difference? Okay, so their parents often, I have to go look at it. I'm not an expert myself. Two of my team members are not here today. We invited Mandy more from the CPA point of view, but I think you can Google it. Some schools are doing the CSS or CCS. Yeah, CSS. Anyway, so we'll owe you an answer. We can chat GPT as well. Yeah. So I personally haven't filled out any FAFSA or CSS for my kids. So, okay. Sorry, G. Yeah, or J. Yeah. We helped this year, the experts of my team that help the parents fill out, or students, whatever, the family fill out both forms. Yeah, for FAFSA and the CSS. So, anything else? Okay, so Mandy, you have any summary like for us, like to be like for kids? I mean, a lot of them probably are in college or going to college this year, but for the parents, they're like, maybe middle school or freshman high school. Do you have any tax advice for them to get the financial aid in a few years?
It is hard because I'm planning too. I'm planning for my kids, and financially it definitely helps. So I think definitely having rental property in California, it's like probably like the hardest thing because it's a good investment, but at the same time, it kind of kills it because California home worth so much, and and it helps that you only have to, it only considered the net value, but I would say I don't know. It's hard, and then they keep changing it. Like I have advised client to put their rental in a company before to go around it because you don't have to list the value of your company. But now that they change it, oh no, no, no. Any company that you own, you have to list it. So I think the most important thing is stay on top of it and see when you're ready to do it, what do you need.
Okay. So my observation is for established W-2 owners, like in this country for quite a few years, like quite a few of us, especially in tech industry, it's very, very difficult.
Right. Yeah.
It's very difficult because the
Yes.
company give you some RSUs.
Yep. And then
and both parents work, forget about it. Okay.
Yeah, I know.
Yeah, unless you got laid off. So we know this year,
Yeah.
last year, some parents got laid off, and
Right.
you have special circumstance, and that you can kind
Right.
of argue. I would say argue, talk to the school that your kid get into it. So if this year your school got into your students get into a good school and you got laid off, right, Mandy? I think they can have a
They
little
can-
bit of negotiation. Yeah.
And then also,
Mhm.
RSU, it's a very tricky key thing because the company exercise it at the when they report it on the W-2, it's at the time the market rate on that date that they exercise it, right? What if the stock went down all the way down, you didn't have a chance to sell it, and it already went all the way down the value, and you're stuck with this high W-2
Yes.
amount in your gross, but then the actual value, it's actually very low. And I think those are special circumstances that your kid or you might be able to talk to the financial aid counselor and see if there's a evaluation of your wages that they can take away the RSU portion of your W-2 because that's not your true wages. That's just your stock compensation in order to qualify for it, because especially if the stock market, it's fluctuate a lot nowadays. It could be really up high, and then it could go to the other way at when you're ready to apply. So that could be one of the thing that you can talk to the council and see if that qualify as a special circumstances for you and
Okay.
your kid. Yeah.
I see. Yeah, if you get laid off,
Yeah.
I would definitely go talk
Yeah,
to.
definitely. Yeah, if you
Right.
get laid off, and
Yeah,
Yep.
yeah. Okay, so
Sure.
that's one. Yeah. Otherwise, I look at a financial aid as for a lot of newly immigrants because you haven't established W-2 yet. You haven't bought a rental home in California yet. So,
Yeah.
and you just got into this country, and I personally think there's a higher chance. Okay.
For you to
Yeah,
qualify.
for the newly immigrants parents. Yeah, some of them still looking for jobs. Yeah. Okay.
And
So we have
Sherry
more.
asked if second home counts. So yes, second home is also considered investment, even though you might not have a renter in there. If it's a vacation home, it's still considered an investment property in the FAFSA application.
Yeah.
Okay.
Okay. So there's more questions. Oh, Mandy does provide consultation, and yeah, we can provide you guys, we can connect you guys. Yeah, no problem. So for the okay, so Cassie has a question. Do you see that?
Kathy, well, yeah. FAFSA
Okay.
try to reduce their aid because they ask divorced parents who financially support more to fill out FAFSA. That's correct. So if the parents are divorced and they're not remarried, or who it's gonna be making more money, it will be naturally the one that's supporting the kid, and they will be the one that fill out the FAFSA application. Not necessarily both. So it will be the primary parents, not necessarily both parents if you're divorced.
Ah, okay. So here's the thing.
Yep.
So, for example, if parents get divorced and the parent who's making less money is taking care of the kid.
Mm-hmm. As long as that parent does not receive child support, because the court usually will order child support.
Okay.
In that, so now child support is part of your assets.
Okay.
So whoever the primary parent, not necessarily, I guess I should clarify, not necessarily who makes more money financially, it's the primary parents going to be the contributor of the kid, but you have to list any child support or any money that your mom or the other spouse received from the other spouse. That will be listed as an asset.
Okay. So we don't, okay, if we have say now just a rich mom, a poor dad, okay? So
Yeah,
the poor dad is taking care of the kid,
right.
but the rich mom is doing the giving the child support. So the student only needs to report the poor dad's income and the child support.
Yes.
And we don't have to show the rich mom's.
No.
Okay.
No, technically
Okay.
she will not be a contributor anymore.
Okay. Okay. So sounds like, families are divorced and arranged and the kids are going to
You
college.
might, yeah, you'll have a higher chances. That's
Yeah,
correct.
yeah. You have a high chance if you go with the poor parent,
Yeah.
right? Yeah.
Yes.
Okay. Okay.
Go for
I
it.
see. Interesting.
Yeah.
Yeah. Okay. Favorable. Okay. So we answered that question. Okay. If you, oh yeah. So if you directly connect to FAFSA with IRS, are they still going to audit?
Are they still going to I think also they're not, because IRS tax return only shows one side of the story, the assets, your home, your rental, the value, they do not show on your tax return. So yes, they will still audit, even though they share IRS tax record.
Okay. Okay.
Yep.
Yeah. So in summary, it sounds like I got a few takeaways. Okay. So as a parent, okay. So Mandy, correct me. That's correct. So this year, basically, if a multiple kids, sorry, right? So you're not getting good discount. If you have a business, sorry, they're getting stingy that you have to report to business, right? Of course,
Right.
you have
Yeah.
rental, even the rental is under a small business like LLC, that still count, okay?
Yep.
And however, now I just learned, right? If you're getting divorced or whatever in the middle of separation, that you might want to make some arrangement, the kid being taken care of by the parent that's not that well off, that probably will help the kid for
Right.
financial aid, right?
Right. Yeah.
Okay. So if you're, of course, we talk about if you're newly immigrant, you don't have a really lot of stocks, homes, and whatever, cash. And you can still buy a home, but more likely to qualify, even though you're receiving gifts from overseas, right?
Correct. Yep.
Okay. And now to me, one of my kids may be going to graduate school and he can apply for financial aid on his own for
Correct.
graduate.
Yep. As an independent student.
Yeah.
That's right.
But all of this only apply to, so now my next questions, US citizen, okay, many of green card holder, right? Green
Yep.
card. So now I have a question. A lot of kids are born, they from Asia, okay? Their parents come here and many years ago, 10, 15 years ago, had a kid. No, the kid has a passport, but the parents are overseas. They don't have the status. Can the kid qualify for financial aid?
Yes, and their parents will still be a contributor, and they still have to fill out their portion. Not having a social security number or they work overseas, it's not doesn't qualify the student to be independent. They will if they're undergrad student, they will still have to list their parents, and the parents will probably have to list their income overseas or how they support them.
Oh, okay. That might be a little bit easier because how can you
Yes. Yeah, it's hard for them to track, yes.
Yeah.
And you
yeah.
still have to consent, even though you never file US tax return, you still have to consent to make sure that they share information with the IRS that you to prove that you never file taxes in the US and never make income in the US.
Okay. Okay. Wow. This is something I've learned. Okay. That's
Yeah.
good. You don't need a social security. Okay. That's
You
good.
don't need-
And then also the last thing is like, you can buy a nice home, at least now you can live
Yeah.
in a nice home, but you still qualify for financial aid.
Correct. Yep.
Okay.
You
Got
should.
it.
At least for right now. Yep.
Okay. Okay.
Yep.
Got it. Mhm.
All right.
Sounds good. Yeah. Good.
Okay.
Okay.
All
Lovely.
right.
Lovely. Okay. So we'll put on the PDF in our what's called website. And if somebody's interested, you can WeChat us here or send us an email. We can connect with you to Mandy, and we have a phone number. Yeah. We can put some information there. Okay. The website will be on the web, you can open on the phone. Yeah. Sounds good. Okay. Good.
All
Okay.
right.
Well, thank you. And thank you, Mandy, for
Thank
such
you.
a comprehensive education. I've learned a lot myself.
Thank you.
Yeah.
Thank you, Dan. Thank you for inviting me. All right. Thank you.
Okay. Have a great night. Thank you all.
Have a good night, guys.
Okay.
Bye-bye.
Bye.